Hello friends, in this series on the income tax cases, today we will discuss a case of Ahmedabad IT80A bench in which the issue before the tribunal was that how the assessee is being penalized and what is the fate of the assessee appeal in case the assessee defaults in deducting the TDS and even do not submit or do not take the benefit of proviso to section 201 subsection 1. This matter has been taken by the Ahmedabad IT80A bench in the case of KESHAVPRIYA Corporation Private Limited versus Additional Commissioner of Income Tax, and this case has been reported in 112 ITR Tribunal, short notes 45. The date of the judgment is 20th May 2024. In this case, the assessee was a builder who was constructing various buildings and has purchased 3 properties on which the TDS under section 194 IA is to be deducted of an amount of 6,02,000 which the assessee did not deduct. When the matter was in scrutiny proceedings, the assessing officer came to know about this default of the assessee and the assessee was show caused why this tax should not be collected from the assessee. There is a proviso to section 201 subsection 1 which says that if the assessee, according to the rule 31 ACB, provides a form 26A to the assessing authority and a certificate of the chartered accountant to the effect that whatever the amount has been paid without deducting the TDS has been taken by the payee into his income, and a certificate of chartered accountant to that effect is being submitted to the assessing authorities, then the AO can treat the assessee as assessee not in default. But the assessee was not able to produce this form 26A and certificate of the chartered accountant, so the assessing officer created a demand of rupees 6,02,000 under section 201 subsection 1 and accordingly calculated the interest under section 201 subsection 1A of 3,84,200, and this interest was calculated up to the date of the return filing date by the payee to whom this amount has been paid. The calculation of interest is being explained in the circular number 275/201/95 dated 29th January 1997, and even the Supreme Court in the case of Hindustan Coca-Cola Beverages Private Limited versus CIT 2007, which has been reported in 163 taxman.com 355, has said that in these cases the interest is to be calculated up to the date of return filing by the payee to whom the amount has been paid by the assessee without deducting the TDS. The assessing officer did not stop here. He also initiated the proceedings under section 271C for not deducting and depositing the tax, and this penalty was levied up to the amount of TDS default, that is 6,02,000. The matter was before the CIT appeal. CIT appeal also upheld the order of the assessing officer by saying that the assessee is not able to follow the rules 31 ACB and has not been able to submit form 26A along with the certificate of the chartered accountant. So the assessee moved to the tribunal. One fact was very clear from the reading of this case, that the assessee was not very much cooperative in the assessment, appeal and IT80 proceedings. He was taking the unnecessary dates from the tribunal, and tribunal was also annoyed for this thing. So the tribunal passed the order by saying that the assessee is not able to prove that this income has been taken by the seller into his income by submitting and by taking the help of proviso to section 201 subsection 1, and the assessee is not able to follow the rule 31 ACB and is not able to submit the form 26A along with the certificate of the chartered accountant regarding that this income has been taken by the payee into his income. So whatever the demand has been created regarding the tax of rupees 6,02,000 and interest of rupees 3,84,200 under section 201 subsection 1A and the penalty under section 271C of an amount of rupees 6,02,000 is justified. Friends, from this case it is very clear that we have to be very cautious while dealing with the TDS provisions, and the TDS provisions are more dangerous in the sense that I have seen in my professional life that people try to submit their returns by their own. I do not find any fault in them, but for a normal person does not know the TDS provisions, their repercussions, and in the business and in the assessees who are in the business also, the problem has become more acute since the tax audit limit has been increased up to 10 crore. So they are out of the purview of the wisdom of the professionals. So it has been seen that they are making a lot of lapses on the TDS provisions. So when their matter will be in scrutiny, then it will be very dangerous for them, even if they are not getting their tax audit done. But according to me, every assessee should take the help of a professional, whether any TDS provision is applicable to him or not. At the end of this video, once again I am repeating the name of the case. The name of the case is KESHAVPRIYA Corporation Private Limited versus Additional Commissioner of Income Tax, and this case has been reported in 112 ITR Tribunal short note 45. The date of the judgment is 28th May 2024. Thank you, friends.